How digital banking is quietly creating the next wave of millionaires. The future of money is no longer being built inside bank branches, it's being built in the cloud. By 2023, the world had more than 235 fully licensed digital banks, with hundreds more offering digital banking services. And here's the real secret. The investors who understand this shift early are the ones who will capture the largest gains in wealth creation over the next decade. Today, you're going to understand that blueprint, how digital banking, neobanks, AI, open APIs, robo-advisors, and embedded finance are rewriting the rules of wealth. And more importantly, how you can use these tools to multiply your money faster, safer, and smarter than ever before. Welcome to Money, Automation, and Growth Hub. Let's break this down like the top 1% would. Section 1. The Unbundling of Finance. The Digital Banking Revolution. The banking system is undergoing a structural shift unlike anything we've seen in 100 years. To understand it, we need to separate three terms most people confuse. Online banking, logging into a traditional bank's website. Mobile banking, using the traditional bank's smartphone app. Digital banks, neobanks, banks with zero physical branches, operating entirely online. This last category is the true disruptor. Digital banks grew rapidly between 2009 and 2014 because they solved a problem legacy banks can't fix: cost structure. Traditional banks run expensive physical branches, rigid IT systems, and massive staffing layers. Digital banks do not, and because of that, neobanks can offer higher interest on savings, lower or zero fees. Faster onboarding, modern tools like budgeting dashboards and automated insights. Their cost advantage is so massive that even with full FDIC protection and heavy regulation, neobanks can still offer better pricing and higher yields. But the biggest breakthrough, they removed geography from banking. This is why digital banks became a driving force for global financial inclusion, especially in developing markets. Section 2. The technology that makes it all possible. Digital finance doesn't grow because it's trendy. It grows because three core technologies transformed how money moves. 1. Cloud computing. Banks are moving their entire infrastructure, data, algorithms, core systems, into the cloud. This gives them faster product development, lower operating costs, higher security, infinite scalability. Legacy banks with monolithic systems simply cannot compete with this speed. 2. APIs and open banking. APIs allow third-party apps to plug into bank systems securely. This is what powers budgeting apps, crypto exchanges, personal finance apps, fintech platforms, digital wallets. Customers keep their money at a regulated bank, but manage everything through a specialized fintech interface. This is the decoupling of trust from delivery, one of the most important concepts in modern finance. 3. AI and data analytics. Banks are no longer competing for physical branch locations, they are competing for data infrastructure. Today, 65% of banks use AI for virtual assistants. Nearly 50% use AI for fraud detection. Over 45% use AI for next-generation lending models. Smart finance is emerging where computing power itself, GPUs, clusters, and high-performance servers, functions like a new kind of digital gold. The better a bank can analyze, personalize, and secure data, the more valuable it becomes. Section 3. Fintech versus traditional banks. Who's winning? 2024 made one thing clear. Fintech is pulling ahead. Fintech revenue grew 21% year over year, while the rest of financial services grew only 6%. Even more telling, in 2023, less than half of fintechs were profitable. In 2024, 69% reached profitability. EBITDA margins surged, payments revenue hit $126 billion, neobanks generated $27 billion. Meanwhile, traditional banks face shrinking margins because overhead keeps rising, their technology is outdated, their revenue depends heavily on net interest income. Fee income continues to decline. The result? Traditional banks are losing control of the most profitable part of banking, the customer relationship. To stay relevant, they're adopting banking as a service, BaaS, turning themselves into the regulated pipes behind fintech apps. The battleground has officially shifted. It's no longer about products, it's about owning the customer journey. Section 4, risks, cybersecurity, fraud, and RegTech. Digital banking brings enormous upside, but it also brings new risks. 1. Cybersecurity threats. 81% of banks face cyber attacks in the past year. AI-powered phishing and social engineering are rising. Banks are accelerating investment into biometrics and real-time fraud detection too. Data privacy, hyper-personalized AI services rely on data. This creates friction with privacy regulations around the world. 3. RegTech, the new competitive advantage. Because regulations are stricter and constantly evolving, both fintechs and traditional banks are turning to AI-powered RegTech systems to automate compliance. RegTech is expensive to implement, especially with legacy systems. This creates an infrastructure tax on traditional banks, widening the profitability gap even more. Bottom line, the banks that invest heavily in compliance, cybersecurity, and real-time monitoring will dominate the next decade. Section 5, your strategic roadmap for wealth building. Now let's take this entire industry analysis and convert it into a practical blueprint. 1. Maximize your core capital using digital banks. Use digital banks for emergency funds, savings high-yield accounts, CDs. Why? Their yields are consistently higher due to lower overhead. Keep a traditional bank only for services that require physical locations. 2. Automate investing with robo-advisors. Robo-advisors are the most cost-efficient way to invest long-term. Fees range from 0.25% to 0.50%. Traditional advisors charge around 1.0%. Savings compound massively over decades. They handle rebalancing index investing, tax loss, harvesting, risk adjustments. Use robo-advisors for your core portfolio. Use human advisors only for complex tax or estate issues. 3. Expand into fractional investing and integrated finance tools. Digital platforms allow you to buy fractions of expensive stocks, automate budgeting, automate savings, integrate estate planning tools. This centralizes and simplifies your entire financial life. Section 6, passive income. The digital ecosystem opportunity. There are 3 major digital passive income pathways. 1. High-yield digital savings, safe, insured, low return, but perfect for liquidity. 2. P2P lending. Historically delivers 4% to 7% returns, but no FDIC protection. Default rates can exceed 10%. Borrowers are often below prime. Platform failure equals capital loss. Treat it as a high-risk alternative asset, not savings. 3. Embedded finance. The next big passive income megatrend. This is where the real wealth is created. If you run a YouTube channel, a website, a social media community, a SaaS platform, an e-commerce brand, you can integrate financial services like payments, microlending, insurance, or wallets directly into your platform using BaaS APIs. You earn fee-based revenue every time a user transacts. This is how fintech unicorns scale. And now the same tools are available to individual creators and entrepreneurs. Final strategic recommendations. To master the digital finance era, follow these 4 rules. 1. Capital efficiency. Move your liquid money to high-yield digital banks immediately. 2. Cost-optimized investing. Use robo-advisors as your default investment engine. Reserve human advisors only for complex decisions. 3. Risk-adjusted yield use. P2P lending only as a speculative alternative asset class. Diversify widely. 4. Monetize the ecosystem. The long-term wealth opportunity is not just investing in digital banks. It's building platforms that use digital banking infrastructure. The future belongs to those who understand how money, technology, and automation converge into one ecosystem. You are not just investing in the financial system, you are learning to build on top of it. If you want more breakdowns like this, covering wealth creation, automation, and the future of finance, make sure to subscribe, like the video, and hit the bell so you never miss a new upload. This is Money Automation and Growth Hub, where your financial future meets your digital strategy.